All right, back here with you on part two of the video that we're doing tonight, just so we don't get too long on it. We're just left off talking about what are the indicators that we need lining up to make these bigger moves. The divergence, of course, is our foundation indicator. The pattern recognition is very important. But the indicators underneath also play a big part, and those indicators we should go over right now. Just a fast review on those. So the patterns we look for, mostly channels, and channels could fall into a regular parallel channel or a wedge type of pattern. You could have a rising wedge, a rising channel, a falling wedge, and a falling channel. This is kind of a falling wedge right here. Wedges and channels, I love them, and I think algorithms love them, and it's very easy and scientific to calculate them and figure out where the areas are. Just consider what a line is. A line is 2 points with a line drawn out, and that line you could extend into infinity. So that if we have two good trend lines here, or at least two good pivot areas, and we can make a third and we confirm that line technically kind of gets a little stronger, and we will always watch that line in case the price comes back down towards it. But in the case of a wedge pattern, there's something better that we watch for, is the percentage of the pattern to fill before it breaks out. It's usually right in this zone. We always talk about, and this is repeating for a lot of the people out there, but we talk about the beginning of the pattern, and if this extended out, the end of the pattern, And this is kind of in that 50% mark, but typically we look for a breakout in the 65% area to the 75%. And that's pretty close. I mean, I'm not perfect on this. We know it's usually after 50, and it really is about understanding the other indicators out there. So we have a VWAP underneath us. We have a 200 period moving average in the red. The blue line is the 50 period moving average. The green line is the 20 period moving average. And then I'm using the quote tracker charts. So it's easy enough to put those on. I right click, I add indicator, add our indicator right there, and all these are defined for you, and it's great to have that VWAP there. The main pivot, the previous close, the previous low, previous high, these are all important. These are support and resistance areas, and that's what we do. We typically look for previous high, previous low, opening, closing prices, and the pivot areas. I actually look at the main pivot mostly. I very rarely look at the support 1, 2. They don't play out enough to really catch my attention. It's more about the VWAP. It's more about the previous highs and previous lows and double bounces and triple bounces and stuff like that, and support lines. The pivots don't play a bigger part as they used to for me, and I kind of don't pay attention to the S1, S2 as much as the main pivot. So here is another pattern that's forming. So here we have another setup at 1040. Now these are all candidates for the best trade of the day, and that's the tough part. Saying, well, if these are all candidates, why won't we take those? And yeah, you should take them. The object here is to really pick your pitch. When it comes down to it, I know you're not going to be able to do it, but if I'm trying to define something I'm trying to really put it in a box for you to really know when to trade, I'll say take one trade and you'll be forced to do that. But I know in reality, you should take this one. You probably should take this one. And you probably should take the other one that we set up here too, which I took at the end of the day. Lots of times you'll have a bigger channel, and this is a good thing to watch, because you'll get bounces, but inside these bounces, you'll have other minor channels developing. You have this nice little minor channel, then you have a channel going up, and then you have a channel, breakdown. So you see these minor channels. I love these. I call these X marks the spots, where two channels, lower trend line. This X marks the spot right there is usually a good level. Came back down to the trend line. A retest of that is good. This is based off of this high trend line, this pivot. Now a retest of this, and then we continue just to kind of keep that out there. And every time the price comes close to it, we could we could confirm or deny the importance of that line, and this would actually hold pretty good. This is actually a divergence. I remember seeing this one being called by the bot today, and it was a good short opportunity, and it had a high and a higher high and just at a trend line. So again, 5 indicators. You want 3 of the 5 indicators to line up. Indicators are broken down for you right here. Hold on. So here is a I'm going to switch over here, and I was just explaining that this is from a webinar that I did for Washington State University for their stock club at the college, and I have a lot of slideshows, and I was doing that. Some of the images are gone, but basically what I want to talk to you about are some of the indicators that we look. When I talk about 5 indicators, we're looking for 3 out of the 5 indicators to line up. The trend line is an indicator. The moving averages I use as an indicator, and the recognizable patterns. That's what it would be saying up here. The recognizable patterns: wedges, inverted head and shoulders, channels, positive stochastic divergences, which that's a big underline. This has been updated a lot, so I would say that stochastic divergence is the ultimate. That should be stochastic divergence. That's our foundation, and then we want to have 2 of the other ones lining up, really. So we want the stochastic divergence plus a trend line and a recognizable pattern, or a trend line and a reversal candle. These defined as previous levels. That's the current high, low, and thing. Looks like, and again, most of these patterns you'll see on here are things that you'll recognize us talking about every day. The wedge pattern. Here's another great example of that wedge pattern coming down to the 200 period moving average. We just talked about that. We just had a trade-off, showed you the trade-off, that same thing on a 1-minute time frame. So that's how important those are. These wedge patterns, as you can see, are just textbook. So once you're able to effectively identify those, you want to be able to have this. Now, all these, a lot of this education, if you remember, you can find it on top of your dashboard under the forums. And under the forums, you'll see a playbook area. It'll be DayTraderRockStar's playbook, and a lot of the all these webinars and charts and stuff are on there. And also, there's intense courses I have on theschoolofstock.com. There's 2 courses: the HPS methodology course and the ultimate divergence course, which is a really intense course on divergences and how to trade those, and lots of good information there. Those are bigger courses, or paid courses. But again, this information here, you can see that on. So we talk about the reversal candles as being one of the indicators, and it has to be one of the 5 candles we see here. Those candles are all defined for your bullish engulfing pattern. All these are could be videos in themselves. How to identify the bullish engulfing pattern. I talk about that every day. You have the smaller body. And the bigger body takes out the lower. It goes lower than the previous body and closes higher than the previous body's close. And we look for these in a channel. So those things are key. I mean, that's all I would trade. I would wait to have the criteria set up. I wouldn't wait for anything else. The other one is a hammer. Remember our definition of a hammer, or any type of reversal candle with a long tail. The tail here, the shadow, has to be twice as big as the body to be an effective reversal candle. Also coming to the bottom of a channel too would help. Piercing pattern, basically the same thing. We take out the lows, we close near the highs, but we close 50%. We close above the 50% area of the previous candle's body. So you can see that right there. Morningstar. I don't pay attention to that one that much. I have to tweeze the bottom on this. I don't do the Morningstar. I'd rather do the island reversal, though. The island reversal is very similar to the Morningstar, but it's a gap down and then a gap up. So this is kind of a what I call a island reversal, an island reversal, a small island reversal. And then we have the tweezer pattern, which is same length of the candles. It's the opposite, bullish engulfing. Again, I go over a lot of this stuff, and again, this is on the on your dashboard up in the educational forums. All right, and there's a disclaimer. You could lose all your money trading, by the way. Disclaimer, red. Back to the overall markets here, and we're going through the day here identifying these higher probability setups. Hey, Pixie. And we have this other one. This is the one I took. Came back from lunch. Watched the market coming down. We broke down under the VWAP. We pushed back up to it, back down, pushed up to it, back down. At that point, we had what we call a running divergence. Divergence here. The third one is always a pretty decent one. You have a low and a lower low. Kind of a decent reversal candle in that too. And the volume spike here, which doesn't mean a lot, but you could see the higher line. Now, the important thing about that divergence is this low and this low. We see that dotted line way down here. Now, remember, not every divergence is equal. A divergence with a higher low, a steeper low, this line right here, the steeper that is, if we had to turn back up in a low here, that would be a stronger divergence. So depending on how, sometimes we'll find divergence, slightly divergence, it'll show up on a scan or something because mathematically it is a divergence. But as this line continues to go up and you see that divergence and the price comes down, that is the better trade. The steeper the divergence, the better the trade. Either way, we had a divergence there, and it showed up on the 44, which I think was the key area for me. When you see it on that's the 14.3, excuse me, but the 44 was right here. It started to show on the 44. I mean, we had a higher low, and that's something that I pay attention to a lot, but we don't see it a lot. So when we do see it, this is something that I would consider one of the best trading opportunities of the day and would take that trade. Now, believe it or not, I'm in the process of programming this divergence into the Rockbot. All right, I am actually in the process of doing that. I would actually be finishing it up today if I wasn't doing this video, but we will not miss this setup. We will not miss this setup in the future, which we didn't. I mean, that's what I'm here. We didn't miss it. It's just that we want to be alerted to it. Hey, Riley. Yep, we're live tonight. So that's another great setup. And again, you could take this different ways. Let's take a look at how we took it today. Let's just take a look at it, and we'll compare how do you want to approach this trade. Say this is the trade we we're waiting for. We have a great divergence. Out of all those, I like this one the best because it shows up on my 44, which probably is very close to a 5-minute divergence on the cash. Even my 60-10 really represents that 5 minutes. And I might be way ahead of you on people. I'm talking so much because I talk about this all the time. So I'm saying 44, 60-10, and you're listening for the first time, and you're like, what the? This is way too complicated. It is not complicated at all. I apologize if I am going too fast. I am passionate about this, and I love talking about it, and I see it like I see dead people, you see these divergences. I'm kidding about the dead people. A little dark humor there. Was he serious or what? But yeah, I mean, when you see this, you think, wow, man, that's I see tight stuff scanning, and he goes, oh, man, I just missed this. Damn it, this is what I come to work for. That's true. It's just what we're waiting for all day. So when we're able to identify that and see it, you got to take it. So how are we going to take this? How do we want to take this? Well, let's talk about that next. Next video. I want to stop this. I want to do 3 video, part 1, part 2, part 3. And the next video is how we approach this and how do we take that trade.